You know how it is in the crypto market. One minute, everything's humming along, looking great, and the next, a massive storm hits. We're talking about a huge, sudden drop that sent shockwaves through the entire digital asset space. So let's unpack what just happened.
Get a load of this number. In just a single 24-hour period, over $230 billion in value, poof, gone, wiped from the crypto market. It's one of the sharpest single-day drops we've seen in months, and man, it happened fast.
That really is the multi-billion-dollar question, isn't it? What causes a panic sell-off like this one? Was it some single event, a cascade of bad news, or something else entirely? Well, that's exactly what we're going to get into. Okay, so to really wrap our heads around what happened, we've got to start with the sheer scale of this market drop. Let's just break down the numbers here. Now, you might hear a 6% drop and think, nah, that doesn't sound like a total catastrophe. But here's the thing. When you're talking about a market worth nearly $4 trillion, that 6% is exactly where our $230 billion figure comes from. It's a staggering amount of value to just vanish in one day.
So what was the main driver here? All the evidence points to one incredibly powerful emotion: fear. And you know what? There's actually an index that measures it. Let's take a look at how that works.
Okay, so this is the Crypto Fear and Greed Index. The easiest way to think about it is like a mood ring for the entire market. It pulls in all this different data, how wildly prices are swinging, what people are chattering about on social media, and boils it all down to a single score of investor sentiment, from extreme fear all the way to extreme greed.
And wow, this chart just lays it all out, doesn't it? The market went from this kind of neutral, balanced state straight into the fear zone. The index literally plunged to a score of 28. That's a level of anxiety we just haven't seen in the market since back in April.
And here's the thing. This wasn't happening in a crypto-only bubble. Not at all. The jitters we saw in crypto were basically a mirror image of what was happening on Wall Street. Over there, concerns about bad loans and trade tensions sent their own fear index into extreme fear. This was a broad, market-wide panic.
Okay, so we've got this widespread fear. How did that actually translate into losses for the biggest names in the game? Let's look at the damage report for the crypto titans.
As you'd pretty much expect, Bitcoin and Ether took some heavy hits, falling 6% and 8%. But look at the altcoins. This is where the real pain was felt. We're talking double-digit drops from major players like BNB and Chainlink. It just goes to show, when fear takes hold, the smaller ships often get rocked the hardest. And the damage didn't just stop with the top 10 coins. Oh no. This sell-off created a massive ripple effect that was felt in pretty much every single corner of the digital asset world. I mean, the impact was just everywhere you looked. The whole meme coin market, its value got slashed by a third. The NFT sector basically erased all of its recent gains. And what about institutional money? It was heading for the exit. Both Bitcoin and Ether ETFs saw hundreds of millions of dollars flowing out. It really shows you just how interconnected this entire space is. So this brings us to our final piece of the puzzle. What does this crash tell us about the traders themselves, especially the ones using leverage to make those big bets? The data here is, well, it's actually pretty surprising. And this is where things get really interesting. Just a week before this crash, a different dip wiped out almost $20,000 billion in leverage positions. This time, only about $500 million. That's a tiny fraction in comparison. It suggests that while the market was definitely scared, it wasn't nearly as over-leveraged as it had been, which weirdly could be a sign of a healthier market overall. And of those traders who did get liquidated, this chart tells the whole story. A whopping 81% of those wiped out positions were from people betting the market would go up. Those are called long positions. These were the optimists, and they were caught completely off guard by this sudden wave of fear. Which really leaves us with this one final thought. We've just seen how fear can erase hundreds of billions of dollars in a single day. But for every single person selling out of panic, there's a buyer on the other side of that trade. So the question becomes, when fear is this high, is it a signal to run for the hills? Or is it the exact moment you should be looking for an opportunity? That's something every investor has to decide for themselves.